Ladies and gentlemen, welcome back to the channel. Here in this video, I will share with you kind of a couple of different things that are going through my mind right now as a mostly all-in Tesla stock investor. Number one, I want to discuss my thoughts about Tesla throughout the rest of this year, heading into next year. As you know, there is an election, and I don't want to get political here, and we're not going to get political here, but there's certain outcomes that could happen if certain things happen regardless, in regards to the election. And I want to share that. That's mainly a 2025 thing that could either help or hurt Tesla. And then we do need to discuss the state of this economy and what could be coming next on that front, and ultimately what I'm expecting out of Tesla coming July 2nd with Tesla's delivery number. I'm just gonna, throw out my thoughts on that, as well as what I'm expecting for earnings coming around July 20th or so. So we're going to talk about a bunch of different things here in this video, all in regards to Tesla and broader markets. Do me a quick favor and hit that like button and subscribe to the channel if you have not done so already. And let's go ahead and just dive into this. So first off, I want to share my concerns about the state of the economy. Now, as we all know, it's only a matter of time before things get bad. For every boom, there is always a bust. And this boom has been on a colossal scale, something in which the U.S. economy has never seen before. The kind of money printing that we have seen, the kind of inflation that we have seen. I mean, on paper, wages have risen about 16% in the last 12 months. Or, well, since all this inflation started in, 2021. And inflation, as per the government numbers, is up over 22%. So on government numbers, wages have not kept up. But let's be honest, okay? Fully honest with ourselves. The actual inflation rate is a lot higher than that. Have you been to the grocery store recently? It's ridiculous, right? A can of formula. My son was born May 20th of 2023, and a can of formula is double what it was in 2020, August 21st, when my daughter was born. So of 2020. So the actual inflation is a lot higher than what we account for. Now, what happens when you go into a boom and people just get all this free money is Amazon builds more warehouses and hires more employees. Chipotle builds more restaurants, and McDonald's builds more restaurants, and there's more investment that takes place because of all of this money that is just given out to people. And that at first seems like a good idea, but now what you're starting to see, if you go to your local restaurant or a business that is upscaled in the last 4 years to accommodate more demand, they really don't need all that space. That's a lot of wasted investment. And what happens with all that investment is more people are hired. Now, due to all the inflation that we are seeing, you are starting to see less hiring, people actually getting laid off. Over 650,000 full-time jobs have been lost this year, and we've only added about 280,000 or so part-time jobs. Now, that's according to the household survey. But I think this is fairly easy to kind of understand about where the money ultimately goes. Where does all the money go? If stimulus checks were sent out to everyone and now everyone's broke, where did that money go? Well, it went to the top 1%, and that is capitalism, right? And that is the way things work. And I don't have a problem with that. Obviously, we're all trying to become the 1%. You can't knock that if you're watching this video. But what happens is prices go up for everything because of all the money given out. Wages are not even close to keeping up. So what happens after you spend all of your money that you were happy to get, your free stimulus checks and so on and so forth, is now you can't afford to survive. And I mean, you go into debt as long as you can, but eventually that doesn't work anymore. And you're getting to the point where that just doesn't work anymore. I think my moment of realization was when I got my hair cut the last time, And I go to like a female salon because they're the only ones I've found in my area that know how to do it right. But this was right after taxes started to come out, and there was nobody working there. They would show up for appointments, unlock the door, go do the appointment, leave, lock the door back up. And this is like one of the best salon around my area. And we were talking, and she said, baby mamas are just not getting their hair done. And she was surprised because, usually, baby mamas will do that like once a year with taxes. And they were skipping that. And that was a big red flag to me with something as discretionary as getting your hair done. People are not doing, then where else are they struggling? Where else are they cutting back? So long story short, you're starting to see the data actually reflecting a slowdown. Now, the issue that I have in terms of the markets is not necessarily the slowdown itself or potential recession. It is the markets are not pricing in a recession at all. There's a 0% chance of a recession if you look at the S&P or the NASDAQ, with earnings expectations expected to grow EPS over 15% this year and around 11-12% next year. Those are very much not recessionary estimates, right? And I think over the next couple of months, we will have to start raising our recession forecast, right? Our forecast for the probability of a recession. And I think that's very problematic when stocks are as rich as they are today, where markets are as lofty as they are today. And you actually see this already taking place in a stock like a Tesla. Tesla's already, to some degree, priced for a recession. Small cap stocks are already priced for a recession to some degree. And what is actually going to happen throughout the rest of this year is small cap stocks and mid cap stocks, the stocks that haven't been doing well in 2024. That's where you're going to start seeing most of the EPS growth as forecast by the markets. Small caps are going to have better EPS growth than large caps. So why are investors not buying small caps? Because they're fearful about some kind of, economic downturn. And the Michigan Consumer Sentiment numbers on Friday definitely help those fears grow. You've seen the Russell was down 2%. The VIX was up over 6%. Just very much risk off kind of attitude. At the same time, you had TLT, which went up again, almost 1%. And you want to watch this as well, because if TLT is going up, that means 10-year treasury yields are falling. They fell about 2 basis points on Friday. And investors will want to lock in those higher yields, go out and buy long duration treasuries when it looks like the economy is getting shakier. And that has started to happen ever since really October of 2023, but even more so recently around the end of April. You've seen TLT go from $86 up to $94.65 per share of TLT, this ETF. So you are seeing parts of the markets that are discounted for a recession, other parts that are not, that are presumed to be recession excluding, right? That will do just fine in a recessionary environment or a good economy. And I don't think that's correct. And I think stocks will sell off when more fears start to rise. Now, the next big date that you need to be watching is July 5th. Happy 4th of July. The next day later, you're going to get your non-farm payrolls report. You're expecting 160,000 job ads, and you are expecting your unemployment rate, which comes out the same day, to come in at 4%. If we start to get any tick higher in unemployment, you are going to see the markets start to freak out even more about a recession. And that's where I think you would be looking at larger downside. Now, around that same time, the first week or two of July, you're going to start getting bank earnings, and that will give us a little bit more insight into the consumer, although it doesn't seem like the markets care too much about what the banks have to say. And I should also mention, for the first time in a long time, the markets are pricing in a solid 2 cuts in 2024, with higher odds of 3 cuts than actually getting 1. So the markets are disagreeing with the Fed's dot plot. The markets are saying you are wrong, you will be forced to cut. Now, if the markets are saying you are going to be forced to cut, then the markets are basically saying the economy is going to weaken quite a bit from here. And that's not good for stocks. Not all cuts are seen as equal. Now, maybe if the cut had come earlier in this year, or even the meeting that we had last week, maybe it would have been seen as good news, because maybe, we avoid a recession. But with the Fed and the last press conference that we had with Jerome Powell seeming like they're not even thinking about cutting rates yet, I'm 100% certain personally the Fed is not going to give us a soft landing. There will not be a soft landing, in my personal opinion. There will be a hard landing. There will be a freak out when the Fed does start to cut rates. Question really is, does the data weaken, from now until July 31st, the next Fed meeting? And the data coming out in July will actually dictate that. So I think July could be a relatively terrible month for stocks if that data does come in bad. Now, could it happen later in the year? Of course. And definitely earnings are going to be a big deal, because the government can fudge the numbers if they want to. Company earnings, though, they give you a much better insight to what's going on with the consumer, what their demand is looking like. And we'll get most of those big tech earnings coming out before the Fed does their next meeting on July 31st. Now, as far as Tesla stock, like I said, I think Tesla's a lot better priced for a recession, be it it's more than 50% off all-time highs. There's a lot of pessimism already priced into Tesla stock at current valuations, right? Where Tesla currently is today. Other small cap and mid cap stocks, could they fall if we have recession fears? Of course. But I think they are better priced for some kind of, recessionary environment. Big tech is not, especially if Nvidia were to see their demand slow down, which it would if we are going into a recession, or if we do go into a recession. One of the first things companies are going to do is they're going to take a hard look at their GPU clusters and say, do we really need more GPUs right now? And the answer to that is probably no. Now, overall, in recent years, after stock splits, which Nvidia just split, you do tend to get some selling as well. So I think Nvidia is going to be important for the overall big tech sector. And I'm not confident Nvidia is going to be able to continue to impress investors if the data starts to look like we're going into a downturn. Now, could next quarter be good? Probably. Maybe. Who knows? What's demand going to look like for the quarter after that? That's where I get a little bit more cautious. Now, at the same time, you have Meta, Amazon, Google, Microsoft, Apple, all of these other stocks, some of which are directly tied to the business cycle and the consumer, that are trading at all-time highs, and markets are like, hey, AI is going to save those companies too. Their earnings are going to be just fine. They're going to be peachy and dandy throughout the rest of this year and 2025, recession or not. And that's not true. 2022 showed us that big tech can get sloshed out as well. If you can't tell, I'm not that optimistic for what could happen next in our markets. Again, with that said, I think Tesla's better priced for some kind of recessionary environment. And even if we did go into a, recessionary environment, I think Tesla stock could fall to as low as $100 per share. But I think you'd probably stay above $100 per share, because a lot of Tesla's fall already has been, pricing in some kind of recession risk or recessionary environment. And that's kind of in the doom and gloom scenario. There's a chance that I could be wrong and 2025 comes around and that's when we get some kind of slowdown. Now, along the lines of the presidential election, if T-Man wins, rates are going to fall a lot faster than most people are expecting in 2025 itself. And that could set up for a really good backdrop for Tesla and for stocks, because let's be honest, rates being this high are probably the number one reason at this point inflation is so high, because it's pushing up the cost of capital. It's pushing up inflationary pressures. The Fed doesn't even realize it, which really gives me a lack of confidence the Fed will be able to engineer any kind of soft landing. So I think the Fed's more problematic than good for inflation at this point. Now, if T-Man does not win, then you're looking at maybe less cuts, a more hawkish Fed in 2025, and that would not be as good for Tesla. And that could have a big difference on what your investments do if we just, want to look at that from the perspective of rates, cost of capital, and bringing down inflation. I think more cuts would be good at this point for bringing down inflation. And really, I could make a whole video on that, but especially in real estate, which is where basically all of the inflation is, people need homes. And with rates this high, it means getting a mortgage is very expensive. So what are people going to do? They're not going to, give you a cheap mortgage. So they're going to charge more. If mortgage prices fall, then you can start to see lower rents potentially. And that's something hopefully we can look forward to in 2025. Now, I do think coming for July 2nd and Tesla's Q2 delivery number, I think it's going to beat Wall Street's estimates. Now, Wall Street estimates are anywhere around 410,000 to 450,000 on the high side for deliveries. I think Tesla can beat those numbers given all of the insane demand that you have seen over on Google Trends, or perceived demand you have seen based on Google Trends data, maybe I should say, for the Model Y, with Tesla offering the interest rate buy down, as well as now the Model 3, which has a lower interest rate being offered as well. I think that's having a really good impact on Tesla's demand. And hopefully these interest rate buy downs do not affect margins too much. I don't think they probably will. And I think margins will continue to look a little bit better. I think margins will be a little bit better on this upcoming earnings than they were last quarter. And I think minus any kind of huge slowdown in the economy or, a fall in markets, and let's be honest, we're just due for a correction anyways, then I think Tesla stock can do very well here. Now, again, I'm not necessarily expecting Tesla stock needs to crater even if the markets fall, but that definitely is a possibility as well. So the bottom line here, in more of a bull case scenario, if we indeed do not go into recession, growth holds up, inflation continues to fall, kind of the overall bull case scenario, then I could see Tesla stock over $300 by the end of this year, heading into 2025, when EPS growth is going to accelerate as margins improve, Tesla launches the next gen cheaper vehicles, so on and so forth. There's so many different catalysts that could help push Tesla above $300 per share. But I actually think Tesla could end this year with a net positive gain for the year, which would sound crazy because we were around, $265 per share just to start the year. So that's more of a bull case scenario. On more of a bear case scenario is the jobs report comes out July 5th and it's really bad. And the Fed is in a situation where they need to start cutting rates. On average, the S&P tends to fall about 23%. Following the first Fed cut, if the Fed is cutting because something broke. And it seems like the Fed wants something to break before they start cutting rates. That's more of a bear case scenario. You could see Tesla ending this year in the 220, 230 range, if that's the environment that we are in. And my actual expectation would be anywhere from $100 per share. Probably during the crash we would bounce there and then start to rally back after the election, like second half of November, December, get a little Santa Claus rally in there, back into the 130s, maybe 140s or so. But that would also include if we were like going into a recession, right? Your worst case scenario. And to be honest, I have no idea what's going to come next in those terms. We could go into a recession soon, or it could take a while. I just don't know, and we won't know until we get more data. But what I can tell you is markets are preparing for that. Markets are pricing that in certain areas, and they're not in other areas. Those other areas are basically just big tech. And again, it's kind of like a house you build on the beach on like 30 stilts, where right now it's like half of the stilts are gone. How long is the house going to stay up on only a couple stilts? I don't know. Maybe you can come in and fix it and start building some new stilts, or maybe those last ones get taken out and the house comes crumbling down. I'm not exactly sure, what is going to transpire from here on that front. So it's a little difficult right now, but I wouldn't blame you if you are heavy on cash right now. So let me know what you think about all of this information down below in the comments section. I think regardless, 2025 is probably going to be a pretty good year for Tesla, because I think rates will come down quite a bit at that point. Even if we are faced with a recessionary environment, typically what happens is you do get, that first crash, that first, drop. And then stocks can start to rally back there as rates are now lower. The cost of capital is cheaper. And a lot of the time the markets panic more than, is actually warranted or justified, right? When the Fed starts to cut rates because something breaks, markets go automatically to, oh crap, it's over. We're going to have an 2008 great financial crisis again. Even if it doesn't have to be anything like that, I think you will get that first initial crash and then a bounce back. So I guess it just depends when we get that initial crash. It's really, in my opinion, just a matter of time with a Fed that is this incompetent, that has basically no idea what they are doing at this point. So, and really have no regards for the economy. They have no regards for the markets. All they care about is inflation, when in fact they are the ones keeping inflation high. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day, and I will see you in the next one.